We're on the edge of a technological revolution. The AI boom is creating once-in-a-generation opportunities for investors. Today, I'll break down 5 companies that could explode in value, from powering data centers to building the next wave of supercomputers, quantum breakthroughs, AI-driven healthcare, and a legacy tech giant dominating the cloud. These aren't random picks, they're companies with real fundamentals and a clear vision for an AI-powered future. I've dug deep into their financials, leadership, and market potential, and what I found is game-changing. So if you want to know where the smart money is going, stick around. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Now let's dive in. First up is Oklo, ticker OKLO, a company that's not your typical AI stock but could be the backbone of the entire AI revolution. While most investors are chasing the latest software or chipmaker, Oklo is quietly working on something even more fundamental, the energy that will power it all. In a world where artificial intelligence is growing at an exponential rate, the demand for electricity is set to explode, and Oklo is positioning itself at the very heart of this transformation. Every AI model and data center needs massive amounts of electricity, and Oklo is developing next-gen small modular nuclear reactors, compact, efficient, and safe. These aren't the sprawling old-school nuclear plants you might picture. Instead, Oklo's reactors are designed to be small enough to fit on a truck, yet powerful enough to supply a data center or even a small city. This innovation could fundamentally change how and where we generate power, making it possible to bring clean energy directly to the places that need it most. Imagine a nuclear battery right next to a data center, providing clean, reliable power 24/7, independent of the traditional grid. This means no more worrying about blackouts, grid failures, or the fluctuating costs of fossil fuels. For the AI industry, which can't afford downtime, this kind of reliability is a game changer. It's not just about keeping the lights on. It's about enabling the next generation of AI breakthroughs by ensuring the power is always there when it's needed. Oklo's Aurora powerhouse can run for decades without refueling and is designed to use recycled nuclear waste as fuel, a game changer for both energy and the environment. By turning what was once considered dangerous waste into a valuable resource, Oklo is tackling 2 of the world's biggest challenges: clean energy and nuclear waste management. This closed-loop approach not only reduces the need for new uranium mining, but also helps clean up the legacy of older nuclear plants. Sam Altman, CEO of OpenAI, is Oklo's chairman, signaling a powerful alignment between AI and energy. Altman's involvement isn't just a headline. He's deeply invested in the company's mission and future. His vision for AI's potential is matched by his understanding that without a revolution in energy, the AI revolution itself could stall. Having someone of his caliber at the helm gives Oklo a unique edge and credibility in both the tech and energy sectors. Oklo is pre-revenue and faces regulatory hurdles, but there's bipartisan momentum to streamline nuclear approvals, and Oklo is making real progress. The company has already navigated some of the toughest parts of the regulatory landscape, and recent policy shifts in Washington are making it easier for advanced nuclear projects to move forward. Oklo's team is actively engaging with lawmakers and regulators to help shape the future of clean energy policy in the U.S. The company's waste-to-energy model solves 2 problems at once and positions Oklo as a necessity for the AI-powered future. Not only does it provide a sustainable solution for nuclear waste, but it also ensures a steady, carbon-free energy supply for the data centers and industries that will drive tomorrow's economy. This dual benefit could make Oklo indispensable as the world transitions to both AI and greener energy. The market cap is still small, but the demand for data center power is set to skyrocket. Oklo could be the pick and shovel play of the AI gold rush. As more companies race to build bigger and more powerful AI models, the need for reliable, scalable energy will only grow. Oklo's technology could become the essential infrastructure that underpins this entire ecosystem, much like railroads did during the original gold rush. The leadership team is stacked with nuclear experts, and they've already secured a Department of Energy site license. This isn't just a group of visionaries, they're seasoned professionals with deep experience in nuclear engineering, regulatory affairs, and project management. Their ability to navigate complex technical and political challenges gives Oklo a real shot at turning its ambitious vision into reality. Yes, it's speculative and volatile, but if Oklo's tech proves out, the upside is massive. Early investors are taking on significant risk, but they're also getting in on the ground floor of what could be a generational shift in how we power the digital world. The stock price may swing wildly in the short term, but the long-term potential is what makes Oklo so compelling. This is a long-term bet on the infrastructure that will power the AI economy for decades. If Oklo succeeds, It won't just be a win for investors. It could reshape the entire landscape of energy and technology, making clean, reliable power as ubiquitous as the internet itself. With Sam Altman at the helm, Oklo is one of the most interesting speculative plays in the market. His track record of building transformative companies and his deep connections in both Silicon Valley and Washington give Oklo a unique advantage as it scales up. Oklo is an advanced nuclear play, still in build-out mode, carrying a market cap of about $24.11 billion. It's not profitable yet, EPS is negative 0.38, and net income sits at a loss of roughly $73.61 million. So the thesis here is all about future deployment and commercialization, rather than current earnings power. If you want exposure to the foundation of the AI revolution, Oklo is a name to watch. It's not just about betting on the next big tech company. It's about investing in the infrastructure that will make the next wave of innovation possible. Remember, high risk, high reward. Oklo is not for the faint of heart, but for those willing to take a chance on a bold vision. The potential payoff could be enormous. As always, do your own research before investing. Make sure you understand the risks, the technology, and the long-term vision before making any decisions. Oklo could be a cornerstone of the AI-powered future, but only time will tell if it can deliver on its promise. Next is Advanced Micro Devices, ticker AMD, the brains behind the AI revolution. AMD has been a key player in the semiconductor industry for decades, but its recent strides in AI technology have truly set it apart. The company is leveraging its expertise to push the boundaries of what's possible in artificial intelligence. While NVIDIA has dominated AI chips, holding a significant market share and being the go-to for many AI applications, AMD is closing the gap fast, thanks to its innovative approach and cutting-edge technology. The competition between these two giants is heating up, and it's driving rapid advancements in the field. Led by the brilliant Dr. Lisa Su, AMD has seen a remarkable turnaround. Her leadership has been instrumental in steering the company towards new heights, focusing on high-performance computing and AI. AMD's Instinct MI300X GPU is a direct competitor to NVIDIA's H100, offering more memory and bandwidth, crucial for training massive AI models. This GPU is designed to handle the most demanding AI workloads, making it a favorite among data scientists and researchers. With more memory and bandwidth, AMD's GPUs are well suited for the next generation of AI applications. These features are not just technical specs, they translate into real-world performance improvements that can accelerate AI research and deployment. Major players like Microsoft, 𝗗𝗓𝗏𝗧 adopting AMD's chips, recognizing the value and performance they bring to the table. This adoption is a testament to AMD's growing influence in the AI space, breaking NVIDIA's monopoly and opening a huge market opportunity. This shift is not just about market share, it's about fostering innovation and providing more options for companies looking to leverage AI. The AI accelerator market could top $400 billion by 2027, even a fraction of that is transformative for AMD. This market growth represents a significant opportunity for AMD to expand its footprint and drive revenue. AMD's strength is its diverse portfolio, Ryzen CPUs, EPYC server processors and Xilinx FPGAs. This diverse product lineup allows AMD to cater to a wide range of computing needs, from consumer electronics to enterprise data centers, creating a powerful ecosystem for data centers. This ecosystem is designed to provide seamless integration and optimal performance, making it easier for companies to deploy and manage their AI workloads. The company's valuation is often more attractive than NVIDIA's, offering investors a compelling alternative. With strong growth potential and a robust product lineup, AMD is well positioned to capitalize on the AI boom. With strong growth potential and a world-class CEO, AMD is a force to be reckoned with. Dr. Lisa Su's vision and leadership have been pivotal in driving the company's success. Risks include fierce competition and the cyclical nature of semiconductors, which can lead to periods of volatility. However, AMD's strategic focus on AI and high-performance computing helps mitigate some of these risks. But the AI boom is a structural shift, not a passing trend. This long-term trend provides a stable foundation for AMD's growth, as the demand for AI and computing power continues to rise. AMD offers exposure to the red-hot AI chip market with less speculation than early-stage plays. This makes it an attractive option for investors looking for a balance of growth and stability. It's a bet on relentless execution, innovation, and the insatiable demand for computing power. AMD's commitment to pushing the envelope ensures that it remains at the forefront of technological advancements. AMD is a $378.25 billion company with 2024 revenue of $25.78 billion and net income of $1.64 billion. Earnings per share are $1.68 and the stock trades at a P/E around 138.74. That multiple tells you investors are paying up for continued share gains in data center, AI accelerators, and PC server recovery. For anyone serious about AI investing, AMD is a core holding. Its strong fundamentals and strategic positioning make it a must-have in any AI-focused portfolio. The upside is real, and the leadership is proven. With a track record of success and a clear vision for the future, AMD is poised to continue its upward trajectory. As AI adoption accelerates, AMD is positioned to win big. The company's innovative products and strategic partnerships are key drivers of this growth. Keep an eye on their product roadmap and execution. AMD's ability to deliver on its promises will be crucial in maintaining its competitive edge. Let's jump to our next futuristic pick. Stay tuned as we explore more companies that are shaping the future of technology. Our third company is IonQ, ticker IonQ, the leader in quantum computing. IonQ is at the forefront of a technological revolution that could reshape entire industries, from pharmaceuticals to finance, and even artificial intelligence. While quantum computing may sound like science fiction, IonQ is making it a reality today. Quantum computers use qubits, which can be both 0 and 1 at the same time, enabling them to solve problems classical computers can't touch. This unique property, called superposition, allows quantum computers to process vast amounts of information in parallel, opening the door to breakthroughs that were previously impossible. Unlike traditional bits, which are limited to a single state, qubits can exist in multiple states simultaneously, exponentially increasing computing power as more qubits are added. IonQ's trapped ion technology uses individual atoms as qubits, offering stability and lower error rates than many competitors. By isolating and controlling single atoms with lasers, IonQ achieves a level of precision that's unmatched in the industry. This approach not only reduces errors, but also makes their quantum computers more scalable and reliable, which is crucial for real-world applications. Their systems are already available on Amazon, Microsoft, and Google's clouds, letting researchers and businesses experiment with real quantum hardware today. This cloud access means that anyone, from startups to Fortune 500 companies, can tap into the power of quantum computing without needing to build their own machines. It's a major step toward democratizing access to this cutting-edge technology. IonQ is generating revenue from contracts with major organizations like Hyundai and Airbus, tackling real-world problems in materials science and logistics. These partnerships are more than just proof of concept. They're early signs that quantum computing is moving from the lab to the marketplace. By working with industry leaders, IonQ is helping to solve complex challenges, such as optimizing supply chains and discovering new materials for batteries and vehicles. Their focus is on quality over quantity, building systems that deliver useful, accurate results. Rather than simply increasing the number of qubits, IonQ prioritizes the performance and reliability of each system, ensuring that their technology can deliver meaningful outcomes for customers. This philosophy sets them apart in a field where hype often outpaces real progress. The company's roadmap aims for quantum advantage within a few years, and their team includes world-renowned pioneers. Founders Dr. 𝗗𝗟𝗓𝗏 Kim and Dr. Chris Monroe are recognized as leaders in quantum physics, and their expertise drives IonQ's innovation. The company's ambitious goals include building machines that outperform classical supercomputers on practical tasks, a milestone known as quantum advantage. This is a high-risk, high-reward play. The timeline for commercial quantum computing is uncertain, but the upside is enormous. Investors should be aware that the path to profitability may be long and volatile, with technical and market challenges along the way. However, the potential rewards are equally significant, as quantum computing could unlock entirely new markets and disrupt existing ones. If IonQ succeeds, it could become one of the most important companies in the world, unlocking new frontiers in AI, drug discovery, and more. Imagine accelerating the development of life-saving medicines, optimizing financial portfolios in real time, or training AI models that are far more powerful than anything we have today, all powered by quantum technology. Investing in IonQ today is like betting on Intel or Microsoft in the early days of computing. Just as those companies helped shape the digital world we live in, IonQ has the potential to define the next era of technology. Early investors in transformative technologies often face uncertainty, but they also stand to benefit the most if the vision becomes reality. Market cap is $21.86 billion on just $43 million of 2024 revenue, with EPS at -2.06 and net income at a loss of $331.64 million. This is a long-duration bet, minimal current revenue, heavy investment, and valuation anchored to expectations of future breakthroughs and scaling. For a small, speculative part of your portfolio, IonQ offers exposure to a paradigm shift in technology. It's a way to participate in the quantum revolution without overexposing yourself to risk. Diversification remains key, but a calculated bet on IonQ could pay off handsomely if quantum computing delivers on its promise. The potential is staggering, but patience is key. Watch their progress closely. Quantum breakthroughs don't happen overnight, but it's But each milestone brings us closer to a future where quantum computers are as common as smartphones. Now, let's see how AI is transforming healthcare. Our fourth pick is Teladoc Health, ticker TDOC, the global leader in telemedicine and virtual care. Teladoc connects patients with doctors and specialists 24/7, and its massive dataset is now being leveraged with AI to improve care and lower costs. Their AI triages patients, directs them to the right care, and assists doctors with real-time insights, making healthcare more efficient and personalized. The Livongo acquisition brought expertise in managing chronic conditions with connected devices and AI, enabling proactive, data-driven care. Despite a post-pandemic stock slump, Teladoc's business is still growing, with millions of visits and a clear path to profitability. The market is pricing Teladoc as if its growth is over, but the integration of AI is just beginning to unlock its true potential. Competition is fierce, but Teladoc's scale, brand, and comprehensive platform set it apart. Teladoc recently announced the launch of a new AI-driven workplace safety feature within its Clarity monitoring solution, designed to help hospitals and health systems more effectively address incidents of workplace violence by analyzing video and audio cues for early intervention. This expansion of Clarity highlights Teladoc's focus on innovation and directly responds to growing safety concerns in healthcare environments by leveraging artificial intelligence to support staff well-being and operational resilience. Using advanced pre-trained algorithms, motion detection, and pose estimation, the expanded solution can visually detect patient movement that could lead to falls, enabling faster intervention by bedside staff. Integrated within Teladoc Health's TV Pro devices, the technology runs on the edge, using local processing power to improve the security of protected health information, PHI, and system performance. The AI-enabled virtual sitter solution is now commercially available and is already being implemented with select clients. This is a contrarian play on the future of healthcare, buying the leader at a beaten-down valuation. If Teladoc executes on its AI-driven strategy and returns to profitability, the upside could be significant. It's a turnaround story built on a massive technological advantage. Market cap is roughly $1.5 billion, with 2024 revenue at $2.56 billion. Profitability isn't there yet. EPS is negative 1.15 and net income is a $1.0 billion loss, so any upside case leans on cost discipline, mix shift, and stabilizing membership and utilization trends. For investors looking for AI exposure in healthcare, Teladoc is a compelling bet. As always, do your own research. Let's wrap up with a tech giant making a big AI comeback. Our final pick is Oracle, ticker ORCL, a legacy tech giant reinventing itself as a powerhouse in the AI era. Oracle's cloud infrastructure is now a top choice for AI workloads, with a high-performance network ideal for training massive models. Major AI companies, including Elon Musk's xAI, are choosing Oracle's cloud for its scale and speed. Oracle is embedding AI directly into its core enterprise applications, making AI adoption seamless for its huge customer base. This creates a powerful flywheel: more customers, more data, smarter AI, and even more customers. Financially, Oracle is a cash flow machine, investing billions in growth while rewarding shareholders with dividends and buybacks. The stock trades at a reasonable valuation compared to other tech giants, with cloud growth outpacing many competitors. Risks include fierce competition and the challenge of integrating big acquisitions, but Oracle's momentum is undeniable. The demand for AI cloud infrastructure is outstripping supply, fueling multi-billion-dollar contracts. Oracle commands an $830.46 billion market cap, generated $52.96 billion in 2024 revenue, and $10.46 billion in net income. EPS lands at $4.31, with a PE near 67.59. That premium reflects the market's confidence in its cloud transition, database moat, and AI-driven workloads feeding into its infrastructure and application stack. With visionary leadership and a strong balance sheet, Oracle offers a rare mix of growth and stability. It's a way to invest in the AI boom with a higher margin of safety. For those seeking both upside and resilience, Oracle is a smart addition to an AI-focused portfolio. Watch their cloud and AI integration closely. Now let's wrap up with some final thoughts. There you have it. 5 companies at the forefront of the AI revolution, each with a unique angle and risk profile. From Oklo's power, AMD's processing, IonQ's quantum leap, Teladoc's AI healthcare, to Oracle's cloud backbone, these stocks offer a diversified way to play the AI megatrend. Oklo and IonQ are high beta, pre-profit plays tied to transformative tech cycles. Teladoc is fighting for operating leverage in a large but competitive space. AMD is the profitable growth name with a rich multiple pin to AI adoption, and Oracle is the mature compounder priced for continued cloud execution. Position sizes should match your conviction and risk tolerance. growth optionality comes with volatility, while the incumbents offer clearer earnings but at premium valuations. Remember, always do your own research and invest for the long term. Which of these 5 do you find most compelling? Let me know in the comments. Thanks for watching. Don't forget to like and subscribe and see you in the next video.